Hey everybody, and welcome to another episode of the Financial Pro podcast. Today we have got an interview with a man who I've known since around about 2016. We've had a couple of conversations in the past. I wanted to bring you a little bit of something different today because many of you are at a stage where you're earning company profits and you're starting to make some decent money in your businesses, or maybe you're financially attuned to what's going on in the market. But what do you do with those company profits? My first thought has always been property. But what have we seen, particularly over the last 12 to 18 months to 24 months? A huge rise in crypto, in NFTs, in things that, to be honest, I don't know that much about. So I thought it was a good opportunity to bring an expert onto the show who can really give us an understanding, who can break it down, and who can talk to us about that. And we've got with us Siam Kidd, who's been trading for 17 years, 7-figure profits from trading and not selling just courses, as you see, particularly in the property circles. But he's made more than 426,000 in a few hours during Black Monday, made over 10,000% on the crypto portfolio since 2017, and made many accurate crypto calls over the years. So he's going to talk to us today about wealth creation, about cryptos, about NFTs. And if you have any questions, put some comments in and I'll try and get them answered for you. So Siam, thanks for giving up a wee bit of time to come and chat.
Yeah, no worries. I'm always up for a chat. Thanks for having me.
No, my pleasure. How's it all going?
Yeah, all hunky-dory. Couldn't complain. Cryptos are booming. And yeah, it's good.
Excellent. So just for the purposes of the audience, give a little bit of an intro. Obviously, you said you've been doing it for 17 years, but what's kind of been Siam's journey from beginning until now?
I'll keep it short because it's very varied. I joined the Air Force when I was 18 and became an Air Force pilot. And I started trading when I was 18 as well. And it was a bit of a seesaw. So my Air Force career was good, but my trading was bad. And then as my trading got better, my Air Force career just went down the gutter. So eventually left the Air Force after about 7 or 8 years to become a full-time trader, blew it all. I made some stupid errors. By that time, I'd been trading for a good 6-7 years, and I thought I knew what I was doing, but still made a bit of a boo-boo, and then ended up rock bottom. So this was probably 10 years ago, where I was basically broke, and ended up I was doing 2 full-time jobs and then trying to set up a part-time business, because by then I got to a point where my trading was good in terms of percentage, but I just had no money. And so I read, Rich Dad, Poor Dad, when I think I was like 24 years old or whatever. That slapped me in the face and realized I had to get into business. And I also realized that if I got good at business, that could then spin off profits into my trading. And then all of a sudden my trading would do well. So yeah, I was doing 2 jobs, or a shitty, I think it was like 16 grand a year admin job at this recruitment company during the day. I was pulling pints in the farmhouse pub in Norwich at night. And then in the nooks, I used to be called Toilet Boy in all my jobs, because I was probably the worst employee ever, because, I saw all the smokers go for their fag breaks, a 5-minute fag break every hour. I was like, what? I don't smoke, so I'm going to go to a toilet break. And what I was doing is I was sitting in the store with my phone, just sending out invoices, trying to build my online business. So yeah, I was basically doing 2 jobs in a business for best part of a year and a bit, until the business grew enough that I could just sack in the jobs and then went full throttle to the businesses. But the first 3 or 4 businesses didn't really take off. Ironically, one of the businesses was a private helicopter chartering company that got like 2 jobs, and I was doing like wedding helicopter flights. And so so that was fun. And then I think it was lucky number 4 or 5 that did well. And then business has done really well since. And the original plan worked. So once businesses were chucking out money, I could then use that for investments, which is pretty cool. I think what a lot of people don't do is they treat their business like some sort of slave. And you have to understand that you yourself are an entity, and you should have your own investments, and you should try and get your personal self financially free. But then your business itself is a legal entity. It's like a person. And so you need to get that business completely financial free as well. But what most business owners do is they try and asset strip it. They strip as much cash from it as possible, and they're barely giving their business enough oxygen to survive. So everyone's obsessed with becoming, financially independent. Well, you need to get your business that way as well. So if your business is, say, 20 grand a month in outgoings, well, your first milestone is to get 20 grand a month in recurring revenue, so that at the beginning of every month, you're not starting minus 20K, you're starting at 0. And then any sales during that month is pure profit. So with all my businesses, no matter what industry or sector you're in, you got to make sure that your OPEX, your operational expenditure, is covered by a recurring revenue stream of some sort. And then it's just plain sailing. You don't have to worry about wages coming up every month or taxes or bills. You just know that your direct debits or your standing orders are going to cover it. So that's that. I got into mergers and acquisitions about 2015. So what is that? 6 years ago, almost 7 years ago. Lost a shit ton of money trying to buy distressed businesses and turning them around. Left a trail of destruction trying to buy out, companies in administration, thinking I could do like a Theopathetus and turn them around. But distressed businesses are distressed for a reason. They're screwed. So I managed to create a way to sort of incorporate my trading knowledge with M&A and created, I guess, my own way of M&A, which no one else has done before. I call it the LoRa, the low risk acquisition. And I think I've seen a fair few M&A teachers or educators copying, or if not stealing, my strategy, which, hey ho, hope it works, but for them. But yes, that's that. So I guess if you, I like, context is the key for everything. And in a world of social media, YouTube and whatnot, people don't get context. They see a headline and they'll make, falsely formed opinions or assumptions and stuff. So I guess I'll stop talking in a second. I just want to give you some context. So as we were saying before this, I've always set up my whole financial orchestra, or my life, for resilience. So the honey badger is my spirit animal. I love the honey badger, and I wanted my whole business world to be as honey badger as it could be. So in the group right now, we have 8 businesses. So there's actually 3 groups, but there's 8 businesses scattered among them. They're all in different sectors, different things. And I know it's not ideal profit-wise. You can get a lot more profits by having, say, 8 businesses all in the same niche, because then you go deeper in that silo and there's, economies of scale and whatnot. But I wanted resilience. So 2020, 2021 was a prime example. Shit did hit the fan. And I think 5 of the businesses got hit really hard, and they're still stagnant, still haven't emerged out. But the 3 that did well have more than offset that. To put it in perspective, in the space of a 15-minute Boris announcement in March 2020, one of the businesses lost 150 grand a month in revenue, just like that. I was like, cheers, Boris. Because half of our clients were NHS contracts and hospitals. So basically all of our NHS contracts just got paused, and they're still paused. They haven't cancelled them. So just waiting for them to, obviously get better. But so that's resilience. And then, so basically at the top, the companies make profits. I call them first order profits. So I spin them back into the businesses to help the businesses. And then second order profits is basically, distributable cash flow. I then put that into investments, i.e. crypto. So all of my companies have their own crypto, and they've done really well. And so what I do with crypto is I don't, especially for the business cryptos, I don't do the up and down trading. I do that on my own personal crypto and get in, buy high, buy low, sell high, all that sort of stuff. But typically most of my crypto, I would say probably 90% of my pot is all in staking crypto. So crypto that gives out a daily cash flow, which is, and in fact with staking cryptos, typically you get paid out every minute typically. But and so fast forward to now, I would say probably 80% of our daily income or monthly income is from crypto cash flow, which is great.
Wow.
So I could chin off all the businesses right now and just have so it's great.
Nice. That is one hell of a journey, and one hell of quite a few little pieces of golden nugget in there as well, in terms of I think one of the things I'm a huge advocate of is, you know, I always talk about my journey, and you might not know, from 2015, I built a business over 7 years that I absolutely hated. But I was still the first in and the last out.
Yeah.
I didn't create it. And I think we all, you know, at some point in time, business owners will fall into that trap. But in actual fact, it's, you know, it's a trap. Like you say, you need to have it substantiating on its own merit in some respect.
Yeah.
And you obviously realized that very, very early on, and have created, you know, such an awesome journey over that period of time with investing. And then there's so many things I want to ask, you know, using the business to invest into crypto, almost, as you say, reading Rich Dad, Poor Dad. The whole idea of when you look at a property is, you know, they say, if you want to buy the Lamborghini, don't pay your cash for it, buy 10 properties that give you a £200 that give you £2,000, and then that pays the rental, and it's
Yeah, exactly.
You've basically done that in your businesses, and then leverage the profits to buy crypto.
Yeah. And also, I do second generation eggs. So, so you have a golden goose that spits out, you know, cash flow, or, you know, golden eggs. What a lot of people do is they have, you know, oh, I fancy a roast chicken this Sunday, and they kill the goose, or they kill the magic chicken that they have, and then they got no cash flow. So, as in your Lambo analogy, what I do is I have a golden goose or whatever, shits out golden eggs. I let some of those eggs hatch into other golden gooses or magic chickens, and then I eat the second generation eggs, if that makes sense.
Yeah.
And when you, and the thing is, I have a lot of critics, and I think it's because I look at the world a bit differently, which is fine. But every single thing in my life, I imagine I'm an alien visiting Earth, looking at these mildly intelligent monkeys, and thinking, okay, why are they doing this? What, you know, the world of money, these chimps are playing, you know, obsessed with money. Why? And then I imagine I'm an alien looking at it with completely unemotionally, you know, unemotional eyes, completely objectively, and go, right, what is, you know, using first principle thinking, what is the most efficient way to get from A to B in terms of energy, time, and resources? And so when you look at the world of investing, again, I've spent many years looking at this like an alien. Whether you're in property or crypto or trading or Amazon selling or whatever, it doesn't matter. We're all in the wealth generation game. And it's not a game against you or me, it's a game against yourself. A bit like golf, really. And what I realize is that you should never, ever, ever pigeonhole yourself into a thing. So I hate it. I don't actually like being called a trader or a crypto person or a business person. I am literally in wealth generation. And you then have to look at the landscape from which you are playing in. You know, the game, the board, the game board that you're on, you know, what is the environment that you're in? And when you look at the environment right now, and you look at what the central banks are doing across the world, on average, every currency is inflating by about 15% per year. Now, I'm not talking about price inflation. I'm talking about monetary inflation. So they're expanding the currency supply on average 15% per year. Last year, the US increased its currency supply by 25%. In the UK, we increased the pound sterling supply by about 16%. So that means is, like, let's say you're in the UK and you're not an investor. You're just parking cash in an ISO, under the bed, whatever. You are 16% poorer in purchasing power than you were last year, because they expanded the currency supply by 16%. So when you look at all the central banks across the world, and you find that there is, you know, the real cost of capital is 15%. That is the hurdle. So if your investments are making you 15% or less, you're losing money. So you then look at that hurdle and go, right, what on the planet, what on earth makes more than 15% per year, you know, consistently, etc. And then you scout, and I've scoured the globe many times, obviously sat in my underwear via the internet, but and business is always a thing that comes up trumps. You know, you can, like, if you're playing around sort of sub 500k EBITDA businesses, from scratch up to sort of 500k EBITDA, you can get 100% ROI every year, year on year and year, until you hit a certain level. When you get to probably about 250k EBITDA, your yearly growth starts plateauing. But then most of my businesses, other than the ones that got hammered with lockdowns, they're still growing about sort of 25% per year. So business is obviously a thing. I have looked at property. This is why I think I've got a lot of haters, because I don't hate property. I look at it like a freaking widget. What does this widget chuck out? Okay, if I buy to let through my personal name, you're going to be losing money. Section 24 screws you because you're charged tax on the revenue, not the profit. So then you look at, okay, what about buy to lets in a limited company? Okay, slightly better. What's the yield? What's the real net yield? Still bugger all. You then look at rent to rent, service accommodation, property flipping, property development, all that sort of stuff. I've looked at it in depth. I've got some very good property friends. We're good mates, but I still say to them, what is your net yield from this property activity that you're doing, whatever it may be? Very like 90% of the people that are in property that I know are making less than 15% net yield. Obviously, this is where the practitioner comes in. Like, you can learn everything about golf, but still be shit at golf because you're just shit at golf. Whereas you can be really good. And so obviously in any niche, whether it's fine wine or salsa dancing, there are going to be some people that are really good. So yes, in the property world, you have people making more than 25% yield because they're probably bolted in, I don't know, an education company on top of it. They're doing some big, meaty, chunky deals. They're building shopping malls and stuff like that. Or, they're being able to borrow unlimited capital at 0.5% from the, some sort of lender, and they're going out and building massive complexes. And so obviously there are those sort of those outliers. And this is where you have to be massively aware of survivorship bias, because everyone you see that is nailing it with property, survivorship bias. It's like going to an event and seeing, someone that's won £100 million on the lottery going, this is how I got rich. I bought a lottery ticket every single day for 5 years, and then eventually I won the jackpot. So this is how you get rich. You need to all go out and buy lottery tickets now. Go, go, go. So yeah, it worked for him or her, but he got lucky. He or she was the outlier. If you then followed that stupid lottery plan, you'd all lose. And so again, listening or watching this interview right now, maybe, quite possibly, I am an outlier. Maybe. I don't think I am. When you just look at everything from a first principle point of view, you can then remain objective. So yeah, so I don't do property simply because of the yield. I don't dislike it. I always use my house as an example. I keep telling the landlord to sell the house because the house I'm in right now is a £2.5 million house. It's got a 25-acre garden. We've got stables. We've got an annex. I've got 4 of my businesses running from the annex. So the staff there, that contributes to the rent. So I don't actually pay the rent. So it's actually gone up. It was £3,000 a month. It's now £3,250 a month. When you work out the yield, and I did it the other day, my landlord is making less than 1.5% gross yield. Now, I don't know if this is in a personal name or a trust or a company, but still, either way, 1.59% gross yield is terrible. He could sell it all, get 2.5 mil, and do anything with it and make a higher yield. So this is why I rent. I mean, it's pointless for me to buy this house when I can use the house for a lot less and use my capital on other things. And this is why then eventually, I'll stop talking in a second. I've realized I'm waffling. I have a tendency to waffle. This is why I'm in crypto. I mean, like, the cash flow is just obscene. If you do things correctly. And most people, when they get into crypto, they're like, oh, I'm going to buy Bitcoin, buy and sell it, and all. They're scared, they FOMO in, they FOMO out, all that sort of stuff. And they're getting churned by the repetitive waves that come, bashing them in. But you can do it differently. I mean, for a start, I've never bought Bitcoin and held it. Never ever buy and hold Bitcoin. That's what a lot of newbies do. They get into Bitcoin, but the thing is, Bitcoin's only gone up 80% since the beginning of this year, which is fine. But if you look at my Kryptonian portfolio, it's up over 700%. And Bitcoin doesn't give you cash flow, whereas mine does. And so, yeah, they're just better ways to do things. Again, you just got to look at everything objectively. If we had the same conversation probably in 5 or 10 years time, I will most likely be doing something different. I really want to get into nanotech and CRISPR, and also 3D printing. But yeah, I'm just in the wealth generation game. I'm obsessive about return on time investment and return on capital investment, and I don't care what the widget is. So that is why I'm business and crypto.
Yeah, that makes a lot of sense. And I such a key analogy as well from the whole rich dad poor dad that you mentioned right back at the very beginning, in terms of, you know, the Robert Kiyosaki method, the Grant Cardone method. Why would you own your own home and have all your capital tied up? Now, I'm a dad of 3 and a wife who wants to own our own home, but I am like, oh, no, let's just go live in a rented. But there's the risk element. But would just not be worth the marriage to deal with it. But you know, there's probably a lot of husbands and wives who face a similar quandary and a similar side of things. But you talking about that whole aspect of everything that you've mentioned is, as you've said, whether it's a business, whether it's a property, whether it's a crypto or any of those aspects, they're just basically widgets that enable you to earn technically a dividend or an income from without having to do very much.
Yeah, exactly. That's it. I don't care what it is. Just you have to be obsessive with the 15% hurdle, folks. I cannot stress this enough. There are so many countries in the world that have experienced massive currency debasement. The currencies, you know, just take Argentina. In 1990, one Argentinian peso equaled $1. Fast forward, and then after 10 years, it was only 5 pesos to $1. And then now, fast forward to now, it's about 100 pesos to $1. It's insane. So this is an insidious wealth erosion that doesn't happen overnight. You realize it over time. And the other reason people don't understand it is because it's exponential in nature. Humans don't understand exponential growth. And so 95% of the move always happens in the last 5% of the time. So what's happening in Lebanon right now, Venezuela, Argentina, they're all suffering the consequences of the last, 15 to 20 years of bad monetary policy. And people think, but we're in the UK or the US or whatever. It's not going to happen here. Wake up. It's happening right now. Last year, the UK debased its currency supply by 16%. And we are like supposedly the financial hub of the world. And the US, I mean, another way to look at it is, put it this way. Okay, my numbers are going to be off very slightly because I'm doing off the top of my head and I can't remember. But if you take the US currency supply, right, it took roughly 230 years to put $5 trillion on the planet. It then took 13 years to put another $5 trillion on the planet. It then took 8 years to put another $5 trillion on the planet. It then took 3 years to do another $5 trillion. And then what's the next one? We've already got it. Biden's got his stimulus package out. It's going to be another 1 year to get another $5 trillion. And that curve is not going to just suddenly disappear. It only goes vertical from here. So you have to be obsessed with 15%. If anything in your life is making you less than 15%, chin it off. Become unemotional and chin it off now. And I've got so many friends and family who have not listened to me over the years and have kept on doing their sub 15% per year stuff. And some of them are in a lot of pain right now. Just, because they're obsessed with whatever widget they're in.
The money's not making enough effectively to cover the inflation side.
Exactly.
Yeah.
And you don't want to just match inflation. You want to make more than 15%. Yeah. So I don't get out of bed for anything less than 25% a year. And there's not much out there that makes, consistently more than 25%.
And I assume one of those is obviously crypto is the thing that does.
Yeah. Honestly, it's...
No, go on.
I was going to say that, there's some part of me really just wants to just cut away like 6 of the businesses and just lead a much chilled out life, and just sit on the crypto cash flow. So
what stops you doing that? Out of interest?
We have in the group, there's about 60 staff. I don't want to lose jobs. That's one. Yeah. I'm actually good friends with a lot of my, my team. Some of the businesses I want to actually, so this is a completely different topic. I don't want staff, full stop. I want partners. So what we're doing, what I'm about to do with 2 of my core team members, they've both been with me for about 2.5 years, but they're solid. I don't want them as employees. I want them as business partners. So one of my companies is a marketing company. So what I'm about to do is I'm going to give them I'm going to give them each about, they don't know the ins and outs of this, the full details, but I'm going to give them each about 20% equity of the marketing company with a plan to earn more equity over the time. So one that just gets them off the payroll. There's no more PAYE for that because they'll just be directors of that business. Two, it's their own risk-free business that they can grow with none of the risk. I've got all the financial risk, and I want them to grow. And so eventually I want to get it to the point where, I'm a 35% shareholder. Those two are killing it. They're recruiting and hiring and training and running their own team. And I just become a fat, lazy cash flow receiver every month from the divvy. And typically when I buy a new business, I don't buy 100% of the business because I don't want to deal with the operational bullshit of businesses. I tend to buy 35% of a business because I insist that the director stays in the business because then they deal with all the bullshit. I just want the dividends. I'm obsessed with cash flow. I just want to sit back and do the least amount of effort with the maximum amount of money. And I mean, I got dressed today, but normally I'm sat here all day, every day in my underwear. In fact, I say I'm dressed. I actually just found the quickest thing. I've got my emoji trousers on.
Wow, look at them. You can't see them on the podcast. I don't think I've ever seen. Well, they basically are the emoji film on a pair of trousers.
So, I'm lazy. I'm just,
It's an ideal life, and it's one that many are going to be no doubt reaching out to you and aspiring to, because there's that belief, and I had it too, where you have to almost work hard in order to be successful. But from the conversation we're having, yes, I've no doubt in my mind that you work hard, but you're working extremely smart. And in essence, it seems to be, I've noticed this particularly in my journey over the last 5-6 years, it's almost the less I work, the more I make in some respects, because you rely more on process, systems and people. And that whole partnership, I'm a huge fan of that partnership mentality. It's one that I'm employing into my own brokerage side of things, because you grow together then, and there's an invested interest. Retention of staff is the hardest thing. And if you can, create people as business partners, there's a vested interest to make it work for everybody.
Yeah. It's, what was I going to say? Oh, no, I've lost it. But yeah, I completely agree with you. Oh yeah, I guess the first half of my business journey, I used to wear the amount of hours I worked in a day as a badge of pride. I'm like, I've worked 18 hours a day. I've worked harder than all of you. And yeah, and I just realized I wasn't doing any leveraged work. So here's the thing: it's how much leveraged work you're doing. So for example, my dad knows I use him as an example. My dad is the prime example of the most unleveraged worker you could imagine. So he is a business owner. He's run he set up the East Anglia's first Thai restaurant like 36 years ago, whatever. And he's a classic baby boomer. He's like 73 years old now, and he's still to this day washes the car park with it, jet washes the car park every day. He hoovers up. He does all the shopping for the chefs, and he refuses to let anyone do anything for him. Just think about this. He refuses to let the chefs do the shopping because he thinks he can do it better, and he refuses to let anyone clean the restaurant. And I'm like, this is not leveraged work, Dad. And he was like, oh, I've been in business longer than you've been alive, Siam. I know a bit more. I was like, bullshit. You've been in business 1 year. You did really well in that first year, and then you repeated that year 36 more times. But which is why your business is dying, because his whole client base are baby boomers. They're literally dying, and he's not getting millennials in, which is where it's the biggest demographic on the planet. You got to be an idiot not to try and get millennials into your business. So, and so it's all about leveraged work. So, like for example, I spend most of my time just like throwing tasks away. If I got something to do, I'm like, right, who can I give this task to? I just want to get it out of my plate. And then another sort of thing, again, nothing to do with cryptos, but I realized that the average small business that does well. So I analyzed hundreds of businesses and what their profits were and how long they've been in the business. And I came up with this rough rule of thumb: 50,000 hours. Once a business has had 50,000 hours work into it, whether it's one person or two people, that business tends to get quite profitable, 10K a month profit plus. And then I realized, okay, being an alien, What's the fastest way to get 50,000 hours into a business? Okay, just get 5 staff doing 40 hours a week. Then you'll get there over a couple of years. Or you get 20 staff doing 40 hours a week each, and then all of a sudden you hit your 50 hours a lot faster. And then lo and behold, you just get there faster. So
yeah, and that comes back to reinvesting the profits rather than actually living off of the profits and making those sensible business decisions, which again, back in 2015, I withdrew all my profit because I wanted to live a nice life and did actually nothing with it.
Yeah.
But to bring back then, we've covered a lot of ground in a short space of time, but I want to get into some nitty gritty for people now sort of tuning in and listening in. One of the things you mentioned earlier is a little bit of I'll go to kind of a few questions that I've collated. So
yeah, there's a good one in the comments at the moment, which the risk of ruin. Yeah.
Yeah, one of the things to mention for people as well, Siam said about the 35%, owning a 35% of a business. One of the fears that I had in my early lacking knowledge business journey was, but if I own 35%, I don't have any control. I don't have any, idea over the profit or anything else. But with sensible agreements and shareholders agreements and partnership agreements, all that jazz, you can still give yourself an element of control, or at least not allow somebody to make decisions without your consent. There's just for anyone who wasn't aware of that, you can easily do what Siam's doing. You just have to make sure you have the right paperwork in place.
I can own 1% of a business, and the business won't be able to do anything without me. It's all about the correct drag and tag rights, the reserve matters. Again, if you get the shag right, the shareholders agreement, that is where it's all in. Yeah.
So you mentioned way back earlier, M&A. What does that stand for anyone who's not aware?
Oh, M&A, mergers and acquisitions.
Cool. So that makes that relative. And just in relation to this, let's go to this comment before I go into one here. So the guy said, I agree, the return on property isn't what many think, but he's wrong to compare crypto returns to property given the risk of ruin. Before we go into that, what actually is crypto?
It depends on what level you want me to explain it. The easiest level is magic internet money. Or no, okay. So yeah, you can still look at it as, I think it's two things really. So there's the core infrastructure behind it, which is blockchain tech. So blockchain is basically like a Google spreadsheet that's on the internet, accessible to everyone, and once something's in the blockchain, you can't get rid of it. So everything is public. And so everyone's contributing to this Google spreadsheet. That's basically what blockchain tech is. Now, a crypto is typically either a digital currency or a digital token that tends to, not all the time, tends to have a blockchain sort of tech running it. Now, with crypto, there are different cryptos for everything. So just like in the stock market, you have different sectors. You have bank stocks, tech stocks, pharmaceutical stocks, yada, yada, yada. You have the same with crypto. Crypto has all of its own individual stocks. So, sectors. And the massive, I could talk forever about this. The massive superpower that a lot of people aren't aware of is that disintermediation is the superpower. It kills any middleman. So if you look at Spotify, right? Spotify came along with their idea, and hey, we're gonna, revolutionize the music industry, and everyone went, you're silly. That's never gonna work. Artists are never gonna, let you have their music on your platform and earn pennies per song played, or whatever. But fast forwards now, I mean, everyone has Spotify. You pay what, $7.99 a month or whatever, and you got access to literally the whole world of music. But what is it? It's still a middleman. It's still the central entity controlling and putting music out there. Crypto actually kills, as I said, any middleman. So crypto will kill Spotify because Spotify is that central entity, and there's already one out there called Audius. And so it's basically crypto with no central middleman, and so it should be cheaper, and it will be cheaper. It's just like Airbnb, decentralized, people's houses, empty rooms, and also hotels. Like Airbnb doesn't own any properties. It's just like the middleman. Well, guess what? Crypto do the same thing. So that's what crypto does. And every crypto is different. Just like you cannot compare two companies and say they're the same thing. You can't even compare Tesla against BMW. They're completely different companies, or BMW versus, Chrysler or whatever. So there's no two identical cryptos. So I think that's a very quick explanation of crypto. What was your other question? Was it Sorry, I'll stop talking.
No, it says on here in terms of, I wanted to get the what crypto is. The guy's comment says, but you're wrong to compare crypto returns to property given the risk of ruin. So what's the risk of ruin?
So risk of ruin is a trading term, and typically risk of ruin is where what is your percentage chance of halving your account? So in a trading term, you have effectively blown up your account once you've halved it, because once you halve your account, your accounts, it takes 100% ROI just to get back to break even. Now, I always look at risk in terms of time. So let's take an average investor. Let's say someone does 10% per year. If you halve your account and then it takes you 100% just to get back to break even, you've pushed yourself back 10 years. So your risk of ruin there is, so that's what risk of ruin is what is the likelihood, what is the probability of you halving your account? Now, I see where you're coming from, whoever you are, but I think that, again, there's more context that is required. If you look at a property, everyone has been conned into the belief that property doubles every 10 years. And that is a myth, by the way. Property in the UK did 0% growth from 1900 to 1965, 0%. Then in the early 70s, Margaret Thatcher and Reagan got together and went, hey, we're going to set up the every man should own his own home regime or campaign. And since then, they have basically massively inflated the property world to basically bring that out there. And if you go way back in time, if you look at the CPI basket, so the Consumer Price Index basket, that's how they measure inflation. So they take metaphorical goods that we all use every single day and go, right, bread, milk, groceries, petrol, diesel, rent and mortgage, all that sort of, basically everything that you spend. They then plotted the price of that metaphorical basket every year. And that is what price inflation is, okay? But then Thatcher and Reagan started boosting, they just pummeled the ridiculous amount of money into property. And guess what happened? Property prices went through the roof and everything started going up. But then all of a sudden that started affecting the CPI basket. They're like, oh shit, inflation's going up. Why? Because, rent and mortgage repayments were going nuts. So this is why I call it the CPI basket, because what the government does is they adjust the basket to suit their goals. So they go, actually, we're going to remove houses from this basket, when in fact your rent or mortgage is, most cases, the biggest expenditure of any person out there, really. If you're within sort of 2 sigma of distribution of this of any nation, pretty much. So They get rid of it, and every now and then they just pick stuff out. Cod price, if cod could go through the roof. Think, oh no, this is not helping our inflation targets. We're going to remove cod and replace it with crab sticks. Oh yeah, that makes inflation much lower. So that's the thing. So I'm coming back to the risk of ruin thing. So with property, when someone gets into property, they typically have a 10 to 20 year outlook on their investment. You don't buy a property aiming to sell it next week, do you? Typically, you're in you buy a property. Let's say you're going to live in it or whatever, or rent it out, whatever. You're probably going to sell it in 10 years' time or more. So you have at least a decade outlook. Whereas with crypto, people get into crypto and think, oh yeah, I'm going to make a killing in 3 minutes. No one really gets into crypto with a 10-year outlook. Now, when you look at crypto with a slightly larger time frame, Bitcoin alone, I don't like Bitcoin in terms of as a asset to hold, but it's the fastest growing asset in human history. It's averaged 200% CAGR since it had price discovery in 2010. There's nothing that's come close to the compound annual growth rate of Bitcoin. And when you just ignore Bitcoin alone, just look at crypto market cap, as in the total market capitalization of crypto. That is the fastest growing market cap in history. Crypto is not like really a widget. It's a network. So network value is the underpinning value of crypto. If you take a fax machine, one singular fax machine, that has no value because you can't talk to anyone. You have 2 fax machines, all of a sudden it has value because you've got a line communication. You now have 2 nodes, 1 line of comms. You then add a third person. All of a sudden, and the more nodes you put in, the more valuable that fax network becomes, right? Well, and then you fast forward, put that on steroids. You now have the internet. The internet has thousands of nodes, roughly 3, almost 4 billion people around the world using the internet. It's very valuable because of utility value there. Now, not many people know that it took roughly 30 years for the internet to hit 100 million users. 30 years. People think it happened over 5 years, over the .com bubble. No. The internet was created around late 1960s between physicists trying to communicate with each other. Then Tim Berners-Lee came around with the World Wide Web. But it took roughly 30 years to hit 100 million users. Bitcoin did that in 9 years. Crypto as a whole did that in 9 years. And by 2024, we're going to have 4 billion users. Now, I was crypto's biggest critic from 2012 up until sort of 2016. I hated crypto, honestly. And I used to be that person going, look at it, it's just crashed 90%. It's gone from, $200 down to 20. And then it happened again a few years later. Oh, it's gone from $1,200 down to $200. And then, it's gone from $10,000. And every time it'd just be doing this long march upwards. So here's the thing. Risk and volatility are not the same. Pre-2017, even 2017, it was highly volatile, yes. And it was highly risky, yes. It wasn't a proven market. It didn't reach critical mass. From 2018 onwards, things changed. Crypto is still incredibly volatile, yes. It is not risky. It has been de-risked. Put it this way, let's just take Bitcoin alone. It's a $1 trillion asset class, just Bitcoin alone. And then if someone looks at, let's take BP, a stock. Everyone thinks, BP, oil company, very solid. Yes. Well, BP has roughly a $60 billion market cap. BP is incredibly more risky to put your money into than Bitcoin, simply by the scale. It's a $60 billion market cap compared to Bitcoin, which is a $1,000 billion market cap. So crypto has been massively de-risked. Now, when you look at the utility network, utility value, and all sorts of other sort of on-chain metrics, you'll see that crypto is not risky at all. Volatile, yes, but not risky as a whole. So yes, you may have big drawdowns. I personally am expecting another sort of 80% price crash. But yeah, if you're going to sell out in the crash, of course, you're going to have risk of ruin there. But if you get into crypto with a minimum of a 5-year outlook, the risk of ruin is very little. And this is why, like I've always said, I have a portfolio called the Kryptonian portfolio. And the way that you can mitigate all of the risks is basically buying the top coin in every sector. So you look at, just like I said, with all the different sectors and stocks, you go for all the different sectors in crypto and go, right, what is the biggest freaking coin in that sector? And you'll end up with like 50 different coins. And then you've basically turned yourself into a tracker fund, but for crypto. So you don't know which sector is going to boom. It could be an NFT, which is booming. It could be privacy coins in the future as they crack down on cash. It could be anything, but it doesn't matter. You know that you have the top coin in every sector. And when you hear of an industry booming, I've made money. And that's why my bog standard Kryptonian portfolio is up 700% this year alone, compared to Bitcoin only being up 80% odd. So I do get what you're saying. Again, time frame and also your strategy is there. Now, risk of ruin is then also mitigated even more so when you stake the coins. So there are coins out there that give you a daily cash flow, or it's actually some coins every minute you get paid out. But let's call it a daily cash flow. When you have that cash flow, it massively de-risks your portfolio because you get the PAG, the potential appreciation gain of the coin, but with staking, you get the yield in the coin. So let's make this simpler. If you buy, let's take Polkadot, a really boring coin. Okay, it's in the top 10. Okay, so it's a massive crypto. It's not going anywhere. Let's say you bought a whole bunch of Polkadot coin, so DOT. I know. Let's just say I'm going to get my calculator out here and just give you some numbers. So Let's say you buy 1,000 DOT. Okay, right now DOT is about $34, so you've bought $34,000 worth of DOT. Okay, DOT pays out roughly 13%. It's pretty stable yield. So every year you're going to get, so 1,000 times 1.13, you're going to get 130 DOT per year chucked out every year. So let's 130 divided by 12. That means every month you're going to be making 10.83 DOT, regardless of what happens with the price. Price goes up, you still get your 10.83 DOT. If it goes down, you still get that. So here's the thing, straight away, right now, if you were to do this and you had your 10.83 DOT per month and the price is say $34, you're then getting $368 per month of cash flow. Okay. Now let's say I'm correct and prices go up. Let's say Polkadot, I think Polkadot probably hit $50 by the end of the year pretty easily. Well, you get the PAG, the potential appreciation gain. So your 1,000 DOT, all of a sudden, if it's now $50 a DOT, your $34,000 pot is now $50,000. So you get the PAG, but then you get the uplift of the cash flow. You're still getting the 10.83 per DOT. So if that then goes to $50, all of a sudden you're now earning $541. So when prices go down, because of that cash flow, it sort of softens it a bit. So for example, this is incredibly crass, but so my staking portfolio, it chucks out roughly £5,000 per day for me, $5,000 a day. It's a bit more, and it's growing as price goes up. My daily cash flow increases, and yes, I can literally take that cash out every day and spend it on stuff. And so when you're looking at wealth, it's all about capital arbitrage, right? So what I have done, or what you can do, I'm not saying you should copy me. There's a lot more nuance behind this. You can go out and borrow, let's say 100 grand. You pay 10% on that 100 grand. Let's say you do an interest-only repayment. So you're paying out, just the interest and the lump sum at the end. So all of a sudden, you've now got this debt on your balance sheet, 100K debt, 10% per year. Well, what is that? What is that on average? So if you're paying 10% on 100K, that's what 10,000 a year divided by 12. That's £833 a month. Okay, that is your cost for that capital. Your sole goal right now is to then go out and convert that capital into something that makes more than 10% per year. That's basic capital arbitrage. But here's the cool thing. Debt is nominal. So no matter what happens, I still owe 100K plus interest, right? So if you can then go and convert that into, say, cash flow in cryptos, where the cash flow will go up, the PAG will also go up, you can then pay off your debt a lot faster. So for example, there's one debt which I'm getting close to. I'm always borrowing money, always, because I'm obsessed with capital arbitrage. There is a debt that I'm having to pay off. It's a 100K debt. It is actually on 10%. And I think in November I have to pay that off. Well, I can now pay off that debt really freaking quickly just from the daily cash flow of my crypto. I just need to save for a month or two. I have the capital, and that way when I'm paying off these debts, I'm not paying off the principal. Remember, I've got my golden goose. I've got my couple of golden geese now, and I'm not letting anyone touch them. I'll pay off all my debts with the eggs. I'm just throwing eggs at everyone now. So and that's, yeah. So you can massively de-risk everything when you do things correctly. But yeah, I agree with that person. If it's the average Joe playing around and dicking around with crypto, yeah, there is a huge risk of ruin because they don't know what they're doing. Just like in property, if I was to get into property development right now, I wouldn't have a clue. I've never done it. So yeah, I'd burn myself, no doubt. So
and that was one of the questions that I wrote down when you mentioned the golf analogy. And by the way, I'm finding this massively interesting, and I hope that everybody listening in live and obviously on the recordings is finding it exactly the same. But when you went back to the golf analogy and you mentioned the property analogy there as well, with golf, you can spend hours on the driving range, hitting the ball, practicing, but you can still shank it and be absolutely crap.
Yeah.
There's no financial risk in doing that. Obviously, with property, we both know the training companies and everything else, and there's financial risk, but there could also be financial reward, which you've already said isn't that high based on the 15%. But with crypto, you know, two things. Number one, you've said about you can draw the cash out. My belief was you couldn't actually draw the cash out because it's not real. And when I've spoken to other traders, they're like, yeah, but it's not real. I don't trade crypto because it's not a physical entity and there's no money to it.
My wife said that a couple of months ago, because although she's been hearing non-stop trading crypto talk from me for freaking years, she still doesn't understand it. She's like, I'll deal with, you know, my stuff, you deal with that. And then I just wanted to demonstrate to her, because she still thought relatively recently that all my crypto money was magic internet money that I had to leave, because I've been telling her.
Well, to be honest,
yeah, because I've been telling her nonstop that the real goal with crypto right now is not to get in and out of this, you know, current cycle, is to be in until 2026. Because I think we'll see $1 million Bitcoin by 2026, and everything else will be crazy. So you should be in this for the medium term goal of 2026, 2027. And then, like, we've just got back from her birthday week. It was her birthday. She's getting really old. And as a joke, I said, "Hey, honey, so we've just gone away, you know, for this UK retreat. Anywhere in the UK is freaking, it costs an arm and a leg. It costs a fortune. This Friday to Monday. We went to Alton Towers yesterday or whatever. I said, honey, I've paid for this whole weekend trip with 1 day's worth of earnings of my crypto. And I videoed it, me taking the money out of my thing and then just turning it into GBP and then back into my Barclays bank account and then paid for the thing with it. You can take it out any second. I could literally log on right now and then take money out like in front of you. With anything, it's just information. People don't have enough information. And what most people do is they form uninformed opinions based on old facts or bad facts. Or not. That's not right. You can't get bad facts. A fact is a fact. Bad data, let's say.
Yeah.
So,
that makes sense. So I was going to say then, so what, out of interest, you said you can log on now and you can pull money out. What platform are you using to manage all of your stuff at the present time?
So, so there's every crypto has. So let's take staking cryptos, okay, as in ones that give out a cash flow. Every crypto will have its own network, okay, or its own staking platform. And so I stake them on network. Now you can be little bit, or I wouldn't say lazy. You could be a little bit. You can do things simpler. So if you open up a Kraken account, so a Kraken is a centralized exchange. I saw one question from John Aikman about his staking. Yeah, so you can stake AVAX, ADA. I'm not sure about FTX. I don't own FTX, and DOT for sure. So let's take DOT. On Kraken, you could send your DOT to Kraken and stake it on Kraken and get 12% constant. And that would be really easy. You put it in there, click the earnings, earnings tab, click stake, max for DOT, and then go. And then all of a sudden it'll be chucking out every day or every couple of days. That isn't the ideal way, because you then have your money or your crypto on an exchange. Now, pretty much every exchange that exists has been hacked at some point. Kraken hasn't been hacked yet, but exchanges get hacked, because if you're a shit hot hacker, what do? You hack where all the money is. Or who has all of the money? The exchanges. So I personally don't have any crypto on exchange. I don't, just because like I used to be a gold and silver bullion dealer, and I used to have a saying that if you can't hold it, you don't own it. And there's loads of people, storing their gold and silver in overseas vaults and whatever. I'm like, if shit hits a fan, do you really think they're going to give you a gold and silver? No. We saw that with MF Global going bust, the world's biggest bullion bank going bust, and everyone lost their money. So it's the same thing. If you have your crypto on exchange and it goes bust, or the government suddenly confiscates it all, and they storm into the HQ and cease trading of that exchange, you're screwed. So I don't trust exchanges. I keep it in my own wallet. Again, I saw your other comment, John. Yeah, you can also stake on Binance. They got some pretty good rates. You can stake your AVAX on Binance. I think you're getting probably close to 7% there for AVAX. ADA is pretty shit, 6%. But here's the thing. Here's the other thing with staking. You look at all of these, boring cryptos like ADA, and you're getting 5 to 6% yield. But people forget the PAG. the price appreciation growth. Remember, you're getting that 6% yield of the crypto. So as the price of the crypto goes up, your cash flow goes up, and therefore your pound sterling ROI goes up. So that's the beautiful thing about this. When you're getting dividends from stocks, like you're getting the dividend in the dollar or the pound. So, if the price of the stock goes up, your cash flow isn't actually going to go up. Whereas, as I explained with that DOT example, if DOT went from $34 to $50, your cash flow would have gone up an extra couple $100. So, yeah. So what was the other question? Sorry, I need to stop talking.
All good, my man. All good. So I presume Binance, that is a platform. And when you're talking about those companies, that's the same as one that I keep getting hit with ads, which is called
Coinbase. Yeah.
Yes.
They're all centralized exchanges.
They're all what? Sorry.
Yeah. They're all centralized exchanges, as in they're an exchange run by a company making shitloads of profits.
Yeah.
Okay. So here's the thing with crypto: you have CEXs and DEXs. So a centralized exchange is a CEX, so CEX, and a DEX is a decentralized exchange. So it's an exchange not owned by anyone. And here is a little tidbit. So this is not I've only got 100 grand worth of cake, but Pancake Swap. So here is this is so Pancake Swap and Polkadot, I think, are going to be the gateway drugs of your staking portfolio. Weed is like the gateway drug, and people then go on to harder stuff.
Other things.
Yeah. So I'm about to start dishing out some weed here for you folks. So if you look at Pancake Swap, I'm going to open up a browser. I just want to double check my numbers. I think off the top of my head, Pancake Swap is like the 36th biggest crypto on the planet. Let's have a look. So if you go to coinmarketcap.com, it shows you all the cryptos ranked in order of market cap. So where is PancakeSwap today? PancakeSwap is 41. Oh, it's gone down. Okay, so PancakeSwap is a DEX. Okay, it's connected to Binance, but it's a decentralized exchange. It's a $4.2 billion market cap, right? So if you're going to invest in a company and it's a $4.2 billion company, you would think pretty safe, and it is. Pretty much anything on page 1 of CoinMarketCap, as in, is going to be a safe bet. So this is the 41st biggest crypto in existence. Now, if you then click on PancakeSwap, now the stats blow my mind because it goes up on a weekly basis. I'm going to read this out. It has 2.8 million active monthly users, 31 million trades in the last 30 days, and $10 billion staked. So what that means is that there's $10 billion worth of cake, that's the token, that have been bought and are staking. So when you look at this from a risk perspective, this is pretty damn solid. It's, it's got the most users of any DEX on the planet, 31 million trades a month, and $10 billion stake. This is solid as houses. Have a guess what the APY is.
No idea.
What would you say a good APY is?
I wouldn't even know the answer. I'm not even sure I know what an APY is.
It's the annual percentage yield. So, yeah, so it's what you. But I'll cut to the story. It's 74%.
Wow. And you were talking about 15% earlier.
So Polkadot. Oh, yeah. So Polkadot is 13%. So that's actually Polkadot's probably your gateway drug at 13%. But obviously, as the price goes up, so does the cash flow. Pancake Swap is like, I don't know, magic mushrooms. You can't overdose on magic mushrooms, but just like you can't die from overdose of weed. But yeah, with Pancake Swap, you can get a 74% yield. So
for the ones who are listening to this then and have no idea on crypto, how does someone even, because with the risk and the monetary side of it and everything else, you've mentioned investing in the biggest ones, but that's going to obviously come with putting the most amount of money in. How would someone even get started on crypto with limited risk, shall we say?
So first of all, education. I wouldn't do anything so whenever I enter a new topic, so here's a prime example, right? I have been playing golf. I'm a fair weather golfer. I'm shit at golf, right? And I've been playing my mate who's good. He goes around on average 80 to 85 shots around any old golf course. I will normally go around at about 100. Okay, army golf, left, right. And then I also don't know much about golf. I'm just a hacker, right? And then he flippantly said to me last year, I think it was November, I was like, Siam, you'll never, ever, ever beat me off scratch, because he always has to give me a handicap. I was like, game on, bitch. And we set up this wager, right? And the wager was that in 2021, I could not beat him on a round of golf off scratch. And he was so confident. I was like, put your money where your mouth is. Because I'm a trader. A trader, you come up with a theory and you put your money where your mouth is and you back that theory up with money. And if you're right, you make money. If you're wrong, you lose money, right? So I'm a trader. So we bet £1,000 that I wouldn't beat him in 2021. What he didn't know is that I approach things differently to most. I then spent a good 20 hours learning everything I could on YouTube about golf, from the grip, the swing, everything. And then once I figured out the information side of golf, and I knew what I was doing wrong in terms of, I mean, Phil Mickelson has a whole training series on YouTube for free. I'm like, Jesus. So I probably spent a good 20, 30 hours over Christmas just watching non-stop golf videos. And then I went out and did 15,000 chips in the garden from January to March. So over 2 months, I did 15,000 chips in my garden, because I identified my short game as the lacking one there. And then in our first game in March, I beat him off scratch. I went round in 85. So I had a 15-shot improvement, and I managed to get in his head during the round, and he went round in like 90. So he had a bad round. I had the best round I've ever done in my life, and I won £1,000. And then I created a website called Siam is Better Than Golf at golfandSam.com. And that, I basically put the £1,000 in £5 notes, and I framed it all and put all his shit chat, his WhatsApp chat in there, and yeah, something like that. It's I found it quite funny. So going back to your sorry, I've gone off topic. Your question is, I would go to YouTube, type Siam Kidd in YouTube, click my face. So you go to my YouTube channel, click playlists, and there's a playlist called Free Crypto Investing Course or whatever. There's over 90 videos of free crypto training. Now, I made most of those videos in 2018, so some of it is dated, but the core learning is still valid. But if you scroll right to the bottom, you'll see all the most recent crypto updates. And about 3/4 of the way down, there's a crypto video that says, Crypto Tutorial for Absolute Beginners 2021. Watch that. It's a 2-hour video, and that basically encapsulates all 90-odd videos into 2 hours. That is the easiest and cheapest way to go about crypto. And I share everything, and even the metrics of when to get in, when to get out. Because a lot of people are shooting from the hips. They don't know whether they're getting in at the low or the high, when there doesn't need to be any guesswork. Have you ever heard of what on-chain analysis is?
I haven't. No, go for it.
So on-chain analysis is like having a Mystic Meg crystal ball. It really is. So if you take, I know, what's probably the world's most respected stock? I know, Apple. Everyone loves Apple. Yeah, okay. So yeah. Apple, massive company, right? Most people wouldn't even bat an eyelid of putting their life savings into Apple in their pension or their SIP or whatever. So yeah, billions of dollars of profits per year. It's got sat on, almost $1 trillion of cash or whatever. But it's not. But it's actually very closed. You have no idea what Apple are doing with their money. You have no idea. The only things you can see what Apple are doing is their quarterly reports and their year-end reports. That's all you can see. And when you dig down a bit, you probably find out they've got 1,600 car engineers. They've been struggling to bring out an electric car for the last 5 years, all that sort of stuff. Anyway, you have no idea what they're doing with the money. Now, let's take Bitcoin. It's $1 trillion asset class, and literally nothing is obfuscated. You can see everything. If I sent you Bitcoin, even 5 pence worth of Bitcoin from my wallet to you, the whole world can see that. Just like if some big whale sent $10 billion of Bitcoin from one wallet to the other, the whole world can see that. So as a result, you have this massive online Google spreadsheet that everyone can see. And so you can data mine that. You can see everything. There's nothing hidden. And that's what on-chain analysis is. It's data mining this huge network where everything is visible. And as a result, you can look at certain charts and it gives you amazing Nostradamus-like predictions. Like, I know exactly when the high is, when the low is, when to, and there's about 20 different metrics that I look at. So right now, every metric is screaming massive bull run, and we're likely going to peak out December to April time. So another, we've got at least another 6 to 9 months of rallying. Probably it may. I mean, there is a high percentage chance we'll probably peak in December and January time, but we're nowhere near a bottom or a high at the moment. So that's what on-chain analysis is, and if you're investing in crypto and you don't know about on-chain analysis, you're gambling.
And I assume that that's covered on your YouTube channel as well.
That is not, unfortunately, no. So yeah.
Some videos in the future.
I probably should, but it's just a lot of effort, and I'm very lazy.
I love the honesty, without a shadow of a doubt.
Yeah,
we covered a lot of ground in today's episode with a great deal on there. I'm definitely going to go and myself dive into that YouTube channel and have obviously a watch and a listen to everything in and around that, and get a clearer understanding myself. And then perhaps it might be, I'm sure other people are going to be doing the same, and we can get you back on to have another deeper dive into it, because I think this is a topic that realistically we could talk about. Well, most definitely you could talk about all day long.
Sorry, mate.
It's all good. I don't think there's not been any, it's one of those things. The worst thing you can have on a date is awkward silences, and we definitely haven't had any of them. So it's all good.
And also another thing that you can have go wrong on a date is when one person does all of the talking. But we didn't even talk about NFTs. I'm sorry. I know that was one of your topics, wasn't it?
Yeah, let's do a little bit on NFTs. What's the difference between, because to me an NFT looks like a cartoon picture, and people are paying thousands of pounds for them. So what is an NFT, and what the hell's going on, and what's the difference with crypto?
99% of NFT is pure bullshit. 1% is the golden stuff. Okay, so a lot of people are probably going to get unhappy about this, because there's a lot of NFT fans out there. Right now, what we're seeing in the NFT space is massive, hyper speculative bubble. Okay, think about it. There are people creating sets of cartoons, right? Like it could be from weird whales to stoned apes or stoned cats or whatever. What is it? Let's take weird whales. They are pixelated images or JPEGs, where they've basically created a picture of a little whale, like literally pixels, very, very small. And they've given it a funny colored hat. That'll be whale 1. Whale 2, they'll change the color of the hat to the point where there's about 20 different whales with different colored hats or accessories, or one whale. And so what happens with these designers? They're creating 1,000 copies of Control C, Control V, and just painting different things. And they're selling these freaking JPEGs for thousands of dollars. Ridiculous. It is ridiculous. Now, when you look at what is the intrinsic value of that JPEG, it's nothing. There's nothing stopping me from literally taking a screenshot or just downloading the picture myself. I can use, let's say you spend $5,000 buying a bunch of weird whale JPEGs. Whoop-de-doo. I can literally go on Google Images and download them on my computer for free. So I know before the NFT fanboys going, yeah, but I'm going to get there. So it is a massive speculative bubble, and it's a bit of a Ponzi. And with Ponzi schemes, they're great until the buying demand slows down or stops. Then all of a sudden, you're that person that just spent $10,000 on a JPEG and no one else would buy it, and the price has dropped 99%. Because what's the intrinsic value of that? It's nothing. Okay? Now, I'm aware that you could say the same thing about the Mona Lisa. What's the intrinsic value of the Mona Lisa? $20? What is it? Paint, canvas, frame, probably a fancy frame, maybe a bit more. But it's worth $100 million. So ultimately, humans do add value to scarce stuff. Now, a lot of these JPEGs are not scarce. And there is a 12-year-old that's just made something like $500,000 by just he went to, I think, Fiverr, got a designer to create some cartoons, and then sold them as NFTs and made hundreds of thousands. So mass bubble, right? The 1%, which is absolutely game changing, is the tokenization ability. Okay, this is what is going under everyone's radar. They're getting sucked in with the crazy pictures. tokenization is NFT's super weapon. It's a freaking nuclear. It's a nuke. Now, what is tokenization? Tokenization is the ability to chop up anything into tokens and then sell it. So let's take your house. You have to hope when you sell your house that you're selling it to the right person for the right price at the right time. And if you've screwed up in any one of those hopes, you've lost out on money or an opportunity or whatever. When tokenization becomes mainstream, and give it 3 years, you'll be able to tokenize anything. You'll be able to tokenize your house. So instead of selling your house in a one-off chunk, it'll be very much like a company. You can chop up your house into, I don't know, 1,000 tokens or 1,000,000 tokens, and you could sell it to your local community, or you could sell it to a whole bunch of different people. And no doubt your house will be attached with a shareholders agreement of some sort, to the point where there'll be that magic sweet spot where you can sell off big chunks of your house, but still live in it and control it and make and demand, control it, right? Just like a company with your drag and tag rights or reserve matters, all that sort of stuff. And so last time I checked, I think UBS created a report that there's roughly $200 to $250 trillion of unlocked assets on the planet, as in illiquid assets, whether that's businesses, properties that can't sell, chunks of land that can't sell. There's roughly, call it 200, in fact, let's just say it's $100 trillion worth of unlocked assets. What tokenization does is unlock those locked up illiquid assets. Boom. All of a sudden, the world explodes in GDP. Not that GDP is a good metric to follow, but the world will expand massively, economically speaking, because all of a sudden, you can then tokenize whatever you want. And guess what? Rightmove, estate agents, they're screwed. Any middleman is screwed, because you will have a crypto version of Rightmove where you can pop up your house or your tokenized house on a smart contract, and you will be able to, mark my words, within 5 years, you'll be able to buy a house in under 10 minutes for less than 10 quid in fees. What are the fees right now when you buy a house? Thousands.
Oh yeah, thousands.
What's the lag? 3 to 6 months sometimes to sell a complete on a house. I mean, you can do it quicker, but I've seen all sorts of horror stories. But within 5 years, you'll be able to buy a house in under $10 of fees in under 10 minutes, because there'll be a crypto version of Rightmove. Everything will be on smart contracts. The deeds, the title plans, everything will be on a smart contract. So as soon as you put the necessary amount of money in the smart contract wallet, the wallet will then ping out all the deeds and stuff, contracts to you. So for yourself, you're a mortgage person.
Yeah.
So a big chunk of your business will be disintermediated, but it's not the end of the world, because in a world of automation and stuff like this, what will have a premium is quality, trusted advice. So your advisory business of people coming to you for advice, what should I buy, what mortgage, blah, 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 that will skyrocket, but the mundane nuts and bolts of it will be automated. And yeah, so banks are screwed. This is why banks hate crypto, because the tokenization part and the disintermediation weapon is what scares the shit out of banks.
Mm-hmm.
Banks are going to die. Give it 20 years.
Yeah, which 20 years is quite refreshing to hear from a mortgage broker perspective, as the mortgage intermediary market, which is probably the majority of people who listen to this. My whole audience, realistically, or majority of my audience, are intermediaries in some way, shape, or form. We broker the right mortgage lender for the client. We broker the right insurance policy for the client. We provide the pension advice, the investment advice, and then a fee is paid, or a commission is received, or a proc, or an annual, a percentage of the annual life insurance premium, etc. So you don't think that will necessarily be affected for 20 years based on the banking?
I'm being massively pessimistic. I mean, conservative here. I actually think it's going to happen within 7 years. Really? If I had a gun to my head and I had to really, really put a precise time, I'd say within 7 years. I'm being 20. I said 20 just to be safe, just so in the future. Yeah, but I actually think within 7 years. And also, who's doing the lending with the mortgages? It's it's banks basically. In a nutshell, it's a bank. All the liquidity providers with mortgages and whatnot, they are banks. when we have tokenization and disintermediation within the property space, the lenders won't be single points of failure or single points of control, i.e. a bank. It will be more crowdfunded. So, decentralized Rightmove / decentralized mortgage providers won't be from one person. You'll get the mortgage, or whether you're getting a 90% mortgage or whatever, it will be amongst 1,000 people. Like it'll be like Funding Circle, but for properties. And it will be completely trustless. So, yeah, I say within 7. And most estate agents are going to get absolutely reamed.
Yeah, and the fact that it's on the blockchain and everything else, it's totally open source, isn't it? At the end of the day. Yeah, very interesting. It's going to be. So there we go, folks. 7 years and the whole mortgage and insurance and pension and investment industry. Who knows? There's a prediction there for the future. 2028. We need to clock what should we say? Let's say 2020, just to give ourselves an extra couple of years. But it's going to be
2030. Yeah, let's say 2030. Yeah,
2030. Sorry. Yeah. It's going to be an interesting one, because one of the big things that still has to happen, is the likes of online providers like Habito and Trussell, who are massive marketing machines that drive huge budgets into their online quotation portals. The bit that they can't get away from is still the regulator's requirement that you have to have advice from a human on a mortgage.
Yeah.
Now, I think in a vanilla sense, your 3 pay slips, 3 bank statements, open banking, that will potentially just disappear. If you want longevity, my belief, and I'm giving a little bit too much away in terms of the thought process, but the specialist market, the property investors, the bridging, the development, the buy to lets, that kind of stuff is potentially going to last a little bit longer, would be my perception based on advice.
Yeah. Yeah, there will always be advice. That's what we find, is that humans always want even more of an emotional human connection in a world of ever I can't talk. When the world is being automated and getting even more automated, human connection is more important. So your advisory business will still do really well, which is why what you're doing at the moment is spot on, because you've built a brand. You are the Gary Das brand. That is you. So whatever business you get into, if you can maintain that good mortgage brand, people will come to you. Even, so, and this is why when you see a lot of billionaires are going to be disintermediated because they are the incumbents. So billionaires are now rapidly trying to get celebrity. They're trying to convert there could be a billionaire that no one's ever heard of running a company that no one's ever heard of, but they're now going to social media to try and make a name of themselves, so that when their incumbent business model dies and they start losing all their cash flow, etc., they are still relevant and they can still transfer that brand, their personal brand, into something else. I mean, if Elon Musk lost everything and all of his businesses were destroyed for, I don't know, whatever happened, okay, and he's literally a homeless, penniless person on the street, do you still think he's worth millions, billions? He wouldn't have any trouble whatsoever setting up a new business.
No, connection, assets, brand. It's
people pay a fortune to have him as a non-exec director. So he has done really well, yes, with his businesses, but himself as a person. And that's what loads of billionaires and millionaires are trying to do. And you'll see that increasingly as time, as crypto destroys industries. I say destroys, gobbles them up. So yeah.
I just got an image in my head of the Silver Surfer, with the whole world going in and just gobbling up the world.
Yeah, definitely. And that's it. Like, it's freaking, it's nuts. And what a lot of people, here's the other thing. I'm getting too in the weeds here. At the moment, crypto as a whole is a $2.5 trillion market business, or $2.3 trillion market cap. When it gets to $10 trillion, which will probably happen within 18 months from now, all of a sudden, crypto is by default a global asset. I mean, already is, but in terms of hedge funds, pension funds, sovereign wealth funds, and all sorts of other sort of tracker funds, a lot of their bylaws dictates that they have to, by their own very mandates, have exposure to every global asset class. Now, the second we pip over $10 trillion, all of a sudden, all these hedge fund managers that hate Bitcoin and crypto, they will be forced to buy a certain allocation of crypto. So this is a massive floodgates. The moment we hit $10 trillion market cap as a whole, it's a massive floodgates that all these funds around the world will have to at least buy, 0.5% or 1% of their whole AUM, assets under management, into crypto. That is trillions of more dollars flowing into crypto. It's nuts. And there's a Facebook user said, so why not hold Bitcoin for 5 years if you believe the price will rise? Yeah, do that. But Bitcoin will rise a lot slower than other cryptos. Bitcoin is this slow, unsinkable aircraft carrier that takes 30 miles to do a UE. Whereas I prefer to be in a plane that flies faster. And also Bitcoin doesn't give you yield, really. I want yield. I want cash flow. Bitcoin doesn't really do that. So yeah, and as Bitcoin goes up, it's going to drag everything else with it. So yeah, I'm all in on crypto. 100% of my net wealth is in crypto right now, or my liquid net wealth.
Yeah. Cheers, Simon. We'll do one last question then from John, which makes a lot of sense. If you were to make one move now in crypto buying wise, what would it be and why?
It's going to open up a can of worms. One move. As in, are you asking for one particular crypto? One singular crypto?
Any move in crypto. It could be a singular crypto. It could be anything that you are, well, I suppose anything that you're realistically doing right now. Why?
OHM. I hate this. I hate this question. I get it all the time on YouTube. It's like, Simon, what are your top crypto stocks? But what are your top cryptos? And all I'm going to say is, if you've learned anything from today, go and put the hours in learning up on it. And then once you've spent 20, 30 hours and you finally understand crypto, then go and spend 50 hours researching OHM, Olympus DAO. So Olympus DAO. It will blow your mind. And I've literally, the second I saw that thing, I was like, Ponzi scheme, scam, rug pull, all of the things. And after 30 hours of researching this, I still thought that. And then I did a further 20 hours of research and I realized, holy shit, this is a game-changing, revolutionary idea. This is game-changing. I mean, crypto itself is great, game-changing. Olympus DAO is even more game-changing. And the thing is, with anything revolutionary, there's a very fine, it's normally indistinguishable from a scam. I mean, everyone said Bitcoin was a scam or a Ponzi scheme. Back in the day, but now we have banks, billionaires in countries racing to buy as much of it as possible. And the dawn of any new revolutionary game changer in any tech is almost identical to a bubble. The amount of people that called the internet a bubble. I mean, it was like everyone called the internet a bubble for the first, from sort of 1990 to 2005, really.
Yeah.
But it's the network effect that people don't understand, and the exponential part of it. But yeah, I spent the best part of 2 weeks just dedicating my whole life trying to find why OHM was a scam, because I thought some of my friends were about to lose a lot of money. And then I've completely converted. And so before you place judgment, put the time in and read everything about it before you even put any money into it. So yeah, anyway.
No problems. And we'll put a link in the show notes to YouTube and all the links that he shared with us to share with you. I want to say a massive thank you for coming on and blowing our minds over the last hour and a half almost. And thank you for giving us your time, and congratulations on, what is a truly inspiring journey, a good lesson or some superb lessons in business, investing, and opening the eyes to crypto and a bit about NFTs as well. So thank you for your time today.
Well, thank you. Sorry if I spoke more than I listened. But yeah, thanks for having me.
No, mate, that's the whole point. You're here. It's my job is to listen and to ask hopefully some good questions, and your job is to do all the answerings and give us some insights and some strategies. But one thing I always like to finish on with this podcast is it's called Financial Pro, and the whole brand of Pro is about perseverance leads to results, which creates opportunity. What does being a pro mean to you?
Doing the thing that you said you're going to do. That for me is doing the thing that you said you're going to do. I've always, for example, in the past, I've been in loads of business masterminds, where you spend an hour on your business and go around the room. And I've always found it weird with these accountability like things. Like people would say, you know, they have an action list, right? They leave their coaching that thing with like, I'm going to do this, 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 and this. Next month you meet, and I'm like, what have you done on your list? Oh, nothing. I didn't do this. Excuse. I'm like, and I've seen this common trend with 90% of business owners, so that they say they're going to do something and they don't freaking do it.
Yeah.
That is my opinion of. I don't have a word for it, and the reason I struggle with that is because when I say I'm going to do something, I just do it. And it's not like, and if there's always challenges and hurdles, but you just go around the hurdles or you try and work around it. And the reason I don't like not do, if I have an action list or I call it an ORBAT, order of battle, the reason I put that there in the first place is because it's going to move me closer to my goal, right? And so if I don't do those action points, I'm not getting close to my goal. And so I know what I'm going to do every day, every week, every month. And I know that if I don't hit my daily goals, I'm not going to hit my weekly goals, which means I'm not going to hit my monthly and yearly goals, which means my 10-year plan goes freaking out the window. And therefore my generational wealth plans they're just willy-nilly dreams. They're not targets. And so I'm nothing special. I got 2 Ds for my A levels, but I just, everything I do, I always have this end goal in mind, which is how can I get here in the fastest, most efficient time efficient manner as possible. And so if I have a target or a list to do, you know, business list or whatever, and I don't do it, I know I'm just dicking myself over here. I'm hurting no one but myself. And ultimately, I want to help as many people as possible. And if I don't hit the goals that I need to get to, I will help less people over the long run, if that makes sense. And then this is where I going into charity. I have a completely different mindset on charity as well. I've got lots of friends who have, you know, charity, which is great, but they haven't helped themselves. So there's one friend which unfortunately I fell out with. I don't know why, but she just hates me. But I'm very blunt and honest with people. I said, look, her name. I was like, you are currently earning roughly £1,000 per month, and you can barely afford to live on all your outgoings right now. And as a result of that, you are not helping as many people as you know, she wants to help. And she was berating me, saying, "You got all this money. Why are you not doing more with it?" And I'm like, "Yes, I can. I do charity as well." And I said, "Look, I'm already doing more charity. I'm doing more good to people than you are, and you spend every waking moment doing your charity type stuff." Yet, and I probably didn't word it as well. And I said, the way I look at this, again from an alien, I can help more people once I hit a certain wealth target. Then I can divert huge amounts of that wealth into actually getting stuff done, then not being able to look after myself and then barely helping the people that I'm trying to help, if that makes sense. Yep. That's probably come out in a really shitty way. I didn't mean it like that. I'm not good with words. I'm a numbers person, but
it made sense. Yeah. I get the point you were trying to make at the end of the day, which is you have to, you know, on an aeroplane, they say you must put your own mask on first, and then you can help other people with the mask. It's exactly the same. You need to put your own goals and aspirations sometimes first, because it's much better to do that. Might take a little bit longer, but then you'll be able to commit 10 times the amount of effort. You know, like you were saying, your 20 hours of learning and then your 50 hours right at the very beginning of this, you said you could either do it with 20 people doing 40 hours, or you could do it with 40 people doing, you know, half the amount of time. It's the same principle.
Yeah.
You're taking longer to get to the phase where you're able to help people, but once you get there, you'll do it twice as quick and twice as many.
Exactly. Yeah.
So that's the way I took that. For anyone who wants to be an arse, you can't. So thank you very much indeed, Siam. I really appreciate you giving us your time this afternoon.
Yeah.
We've had some great comments on the live as well. So thank you, everybody who has tuned in. We've been consistent throughout the whole session. Ladies and gents, big virtual round of applause I'm sure you're giving to Siam. Thanks very much indeed for tuning in. Don't forget to rate, review, subscribe, leave your comments wherever you choose to leave them. Reach out to Siam on his social media channels. He's very direct and outspoken on a few topics on his Facebook profile. We can go into that today. So yeah, thank you very much indeed for tuning in. Remember, now's the time to become pro.